Hi, I'm AJ Truck.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, your trusted partner in the home buying process.
At AnnieMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started.
Hello, everybody, and welcome back to Keeping It Real Estate with Jeff Swiderski. Jeff, how are you?
I am great, Ben. How are you?
I'm fantastic. I'm better now that you're here.
Feelings mutual. Yeah, it's always a great way to start my Thursday.
Thank you. It's a great way to start my Thursday as well. Today we are talking about breaking down your mortgage options, what every buyer needs to know. What does every buyer need to know?
It's always amazing to me when they do like surveys and studies, whatever you want to call them, about people's perceptions of how to buy a home. Like our parents' generation, if you went into your local bank, you had to have 20% down. That was the norm. That was just required. So saving to buy a house was like a very, very strong prerequisite requirement, all of those things. And now,
but back then, 20% was $36.
But seriously,
yeah,
yeah. But it's all relative, like sliding scale of wages, like
yes, yeah.
But the barrier to entry. So, like, there are certain surveys that show that 80% of people still think you need to put 20% down in 2025. That quite literally blows my mind, and it makes me feel like our industry is doing a terrible job of getting this information out. And that's why I wanted to talk about this today, because there are so many loan options where you don't have to put anything down, or you have to put 3% down. Like, the fact that percentage of the population thinks you have to put 20% down is, again, like us doing a disservice to the average consumer, in my opinion.
Yeah, that makes sense. I have no idea what any of this is. So I know that, but I know that there are different home loan options now, and that there's like, you can do 3% down on federal loans, or whatever it may be. I know that there are things 3.5% down, something like that.
Yep.
Am I right?
See, yeah.
All right.
FHA.
Thank you, Google. FHA. That's what I meant. Yes.
Ooh, Ben's on fire this morning.
Yeah, and there's so I understand that there's different mortgage options.
Yes.
I don't know what they are, and I'm scared to ask.
So that's what we're here for.
I know.
And part of this, honestly, I always tell clients, especially on like an introductory call or a buyer's consultation, where we're just getting to know them, and they already did their Googling, right? And like, exactly to your point, they're like, well, is FHA my best option? And it's impossible for us to know. Like, there are so many variables that go into what is the best loan option for you. And until we fill in those variables with a pre-approval application, see what those numbers actually look like, it's impossible to answer. But I'll still give the generalization of those loan programs, again, just so people know what's out there. Number one is Rhode Island Housing. Rhode Island Housing has great loan options. Years ago at this point, during COVID times, the federal government gave a lot of money to the states, and the states allocated some of that to be down payment assistance. So there was a grant, and a lot of people think that once that grant money ran out, that Rhode Island Housing somehow like evaporated into the ether, which is so far from true. Rhode Island Housing has 2 down payment assistance options that are generally available to the public that are awesome. It can be $15,000 to $20,000 towards your down payment and closing costs. So again, how long does it take the average person to save 15 or 20 grand? You could, potentially borrow or hold that money from Rhode Island Housing rather than your own checking account. USDA, another awesome option that people don't even realize is out there. People think of USDA as like beef and farms, and believe it or not, almost all of southern Rhode Island, all of Rhode Island for the most part, honestly, is going to qualify for USDA rural financing. You
Yeah,
look like you have a
that's what.
question.
Well, no, that's what my parents. I know because I was paying my parents' mortgage
Mhm.
at the end of their term, and it was USDA
Yeah.
rural housing.
Yeah.
Yeah. It
So
was I think they originally got it through Farmers Home.
Yep.
And yeah, and so that was the first time that I knew, like, oh, there are different options, and there was some sort of a sliding scale with that where the interest was paid for the first like 5 years of something. There was a sliding scale, and they had to pay it. They didn't have to pay it until they sold the house or whatever. Like, I don't know what it was, but it was the first time I was like, oh, it's not just straight up you buy a house and you put 20% down. And like, that was the first time I ever knew about that, was USDA rural housing.
Yeah, I mean, and whoever set them up with that loan, that's awesome to hear, because, you know, it probably was a great option for them. And USDA, like, again, people always think there's like this massive pro and con to things, right? Like if I'm putting 0% down, which is what USDA's requirement is, no down payment at all, that, you know, I'm going to be getting absolutely hosed on interest rate or, you know, whatever. And USDA's rates are actually better than what you would normally see on conventional financing or from a bank, something like that. So it can actually be the best of both worlds. You know, they're on all of those types of programs where it's 0% down or down payment assistance, things like that. There is usually an income cap. So you have to make enough money to support the loan, and you can't make more money than what the program allows. But those numbers are very, very forgiving now. Again, it's the sliding scale of wages over time. So a lot of those programs, you can make well over $100,000 a year and still qualify for those programs. So they're really not that restrictive. And I just think it's a great way to get people into home ownership that maybe thought they couldn't.
Yeah, but it does make a great thing of, like, you know, if you are making $1 million a year, you're not going to take that program from somebody else that needs it.
Amen. And quite honestly, like, that's the thing, right? Is that person making $1 million a year should be in a position to put 10 or 20% down on a home, not to generalize, but you know, it's a pretty safe assumption that they probably have some savings, investment accounts, things like that they can utilize. You were already segueing into FHA financing.
That's what I do, baby.
Yeah. Killing it. In FHA financing, you can put 3.5% down on any property up to 4 units. Like you could buy a fourplex and have 3 renters paying for whatever, you know, portion of the mortgage that covers, and you could put 3.5% down on that building. Like,
Wow.
You know, you talk about an easy way to, it's called house hacking, you know, buy a multifamily property so that you're not responsible for your full mortgage payment, taxes, insurance, everything that goes along with it.
That's all I want.
Yeah, but think about it. If you buy a fourplex and you have 3 rents coming in, you know, you can, generally speaking, live pretty affordably anywhere because, you know, rents are always relative to property values for the most part, or incomes. So yeah, it's a really fun game.
Are there a lot of multifamilies around that are purchasable at the moment? Like, I feel like, and I don't even know where to look for those, right? Because generally speaking, I don't see a lot of them on the Zillows and stuff when you're, or maybe I'm just not searching the parameters. Like, how do you find a multifamily investment home like that?
Work with the right realtor.
Yep.
That's absolutely my default answer, because there are, you know, realtors that specialize in anything, just like there's anyone that specializes in any niche. But you know, a realtor that focuses on investment properties, multifamily properties, things like that, they're probably going to know a lot of similar clients. And you know, I won't, again, generalize, but a lot of those clients want to do things off market. It's easier for them. They don't want to, you know, have to bother their tenants with showings and open houses. And like, there's a lot more work that goes involved in putting a 3 or 4 family on, because now you're coordinating 3 or 4 families' lives all on the same Saturday.
Sounds awful.
It's not an easy task.
Yeah.
So if you can do it off market, things like that, and make it just an easier process for everyone involved, because again, your average landlord does care about who's living in their property, believe it or not.
Yeah.
So if you can make that easier. So that's one thing I would definitely say in that arena. And then number two is, you're absolutely right. Like, we're still in a low inventory environment locally. So yeah, there are very few multifamily properties that are actually, publicly listed for sale. And that's because, again, if somebody bought that property even 10 years ago, their, carrying costs for that property are so low relative to where rents are today. They're probably making good money on that property. And it's like, that's a tough sell. If you were making thousands of dollars per month and you're, not facing a lot of tenant turnover and things like that, why would you bother selling it? So yeah, you're spot on. It's low inventory still.
I love every time you say that I'm spot on. Thank you. So, but how do you go about finding out, like, what, if you're a first time home buyer, like, which loan is best for you?
Talk to me. That's
Yeah.
That's really that's really the planning aspect. Because I have clients all the time, they'll say, I don't know if I want to buy a multifamily or a single family, and sometimes, for that client, depending on what their overall qualifications are, it might make more sense for them to have just regular conventional financing if they do go the single family route,
Right.
where it does still make sense for them to go FHA on a multifamily. So we'll actually have, like, I have clients sometimes that I have 2 pre-approval applications set up. I copy them, and that way I can run numbers for them in real time and update things based on just that specific property type. So that's where you have to have that conversation with someone that really wants to educate you and wants to work with you and work through what your potential scenarios are.
Pre-approval.
Mhm.
What's the other term that people think about with pre-approval? Pre-qualified.
Yes.
Yeah. I just feel like, because, and I know that I go back to fear all the time when we're talking about this, because I do feel like it's the biggest conversation, like, it's the biggest purchase that anybody will ever make is their home or a home, and the only thing that could top it is another home. So so there's a lot of fear and there's a lot of insecurity that goes along with all of those things for many people. And now, where everything is online, you and I were talking about Venmo earlier, and how, like, even sending somebody a Venmo or a Cash App or something is easier than, talking to them in person. We see things like Zillow, we see things like Realtor.com and homes.com is the best.com. Sorry, the good marketing that got stuck in my head.
Yeah.
And Rocket Money and Rocket Mortgage and stuff like that. And we think, oh, I don't have to have that scary conversation with somebody. Millennials hate picking up the phone. I know it's a stereotype, but it's true. I would rather like throw myself in front of traffic than talk to somebody on the phone sometimes. What people are doing is they're going online, they're looking at these things, they're daydreaming on Zillow, and then they're, they're typing in to Google mortgage calculator, or now they're talking to ChatGPT, hey, this is my income, what kind of mortgage could I afford? And they're not getting accurate results in those things, or these software companies that are making these things are sending them pre-qualification letters, and people are just getting all sorts of wrong information because they're afraid to just pick up the phone and call 401-486-0853. It's so backwards.
That's a great word for it.
But pre-qualified versus pre-approved. If you get a pre-qualified, it's like everybody knows now that when you get a not everybody, most people know now when you get an email or a letter in the mail from Capital One that says you're pre-qualified for a $10,000 credit card. That doesn't mean it. They're sending that to everyone.
Yes.
So do you see a lot of people now that have done this, doing their own research online with these apps and with these algorithms and all of this?
So as a researcher myself on any host of topics, it's painfully relatable. But yes, I'll say yes, just as a generalization, which I think is a good thing. I don't think it's a bad thing to kind of have some information already available to you. Like, that's the joy of the internet. That's the joy of AI, right? Like,
Yep.
we can figure a lot of things out on our own. But I think the second layer to that is then when you're talking to someone, maybe not look at it with confirmation bias, but if you did research and you are very confident in, whatever ABC, and that person's contradicting it, be willing to speak up and have that conversation and say, I did do some research and like I found this, and you're going to know pretty quickly whether or not you trust that person's guidance. Either they're going to be able to clearly articulate and educate you on whatever it is that difference is and why it doesn't make sense or what the pros and cons are, or they're not.
Yeah.
Right? Like that to me is the power of having the information available. Is now you do have some education on the topic. It's not just someone throwing something foreign at you. You can sit there and go back and forth and actually understand, our business a little bit deeper. And it's vetting me out. Like, I love that because I'm not going to be arrogant about it, but I know I'm going to be right, generally speaking.
Yeah.
So having that conversation is awesome. Something you said though, when you were talking about, people go to ChatGPT and they're getting wrong advice. Think how many people are, frustrated that a grocery store has self-checkout, or when you go into a fast food chain and it's a kiosk and you don't talk to, like, people get frustrated about that aspect of life. Like, they almost want the human element in those small interactions, which have no bearing, no impact, no anything on their life. Not saying it's right or wrong, but you were saying this is the largest financial decision you will probably ever make in your life. Again, back it up with all of the research, cross-reference things that the lender says, your realtor says, do all of that. Like, have as much confirmation and research as you need. But at the end of the day, don't you want someone that does this all day, every day, guiding the most important decision and financial obligation of your life? That would be the easy, kind of connection there for me.
I know I do. I can't trust we made a video for the Super Bowl where one of our hosts for a sports show, one of our hosts' son, their son was in New London or somewhere, and made a video jokingly where he was outside with the snow and a ruler, and he was like, "Hey, I'm the 321 meteorologist, and and his wife was throwing snow at him to make it look like it was a blizzard and whatever." And we posted that video on social, and we called him the chief meteorologist for 321. Months later, I'm looking up, he's doing this charity thing, Run to Home Base. I Google his name so that I can find the website to donate to.
Mm-hmm.
And the Google AI overview says Gary Collins is a meteorologist in Westerly, Rhode Island. From one post.
That's beautiful.
From one post ever. It says Gary Collins is a meteorologist for 321 Media and News, which we're not news, in Westerly, Rhode Island. Like, call Jeff if you have a mortgage question. Do not rely on these things.
On the 321 meteorologist.
Yeah, don't rely on the 321 meteorologist.
Yeah.
There's no meteorologist that works at 321 Media.
And so even when you were talking about pre-qual versus pre-approval, right? Like, we can all make assumptions about, what we might qualify for, right? Like, you usually have a pretty good idea of your income, your assets, all of those things. And if you did plug all of that into ChatGPT, it might give you a general sense of a budget. Like, a lot of people are using it for budgeting. I think that's great, honestly, because I think more people just need to have a budget.
ChatGPT told me last week that I was pre-qualified to buy a pack of gum.
Sweet. Any specific flavor?
Not a specific flavor, but a specific brand.
Yeah, you remember?
I couldn't get over
it as a kid. It was great.
Yeah, I can't afford juicy fruit.
I don't know what that says about you, Ben. But a pre-qual. So you're doing the same thing. Like you're just telling something your information or telling someone your information. If you're wrong about that information, then the variables are wrong, and the output that you're going to get is also wrong. That's the whole point of a pre-approval, is that we're actually documenting it, we're vetting it, we're making sure that all of that meets underwriting standards, because at the end of the day, that's all that matters, is how is this going to be viewed from an underwriting guideline standpoint. All of the programs we were talking about, whether it's conventional, USDA, FHA, VA, all of those loan programs and loan types, they all have very specific written guidelines. You could Google the Fannie Mae seller guide or the Freddie Mac seller guide, and it's hundreds or thousands of pages of very detailed guidelines around every type of income, every type of asset, every type of everything you can imagine that goes into a mortgage file. That's what we're here for, is to apply those guidelines to your situation and then know what loan program actually, fits, makes sense for you, all of that.
Wow.
Yeah.
Wow.
So guessing, dart throwing, not a great game to play in this business.
No.
Just being honest.
No. Well, this has been fantastic. Thank you for letting me know of all of these new loan options. And not even new, some very old school classic loan options.
Unknown.
Yeah, I think that we talked about one that my parents took advantage of nearly 40 years ago.
Right.
So, this is what we do on this show. So, leave in the comments, send a text to Jeff, send an email, or DM our pages or anything like that. If you have questions that you want answered, by the mortgage magician. Mortgage magician. Can you do any sleight of hand magic?
I cannot. No.
Okay.
No.
Well, never mind.
Yeah, different skill sets.
Never mind.
Does it look rubbery?
A little bit.
A little bit.
I don't know why there's a pen on the table.
Me either.
Patrick's gonna come in and he's gonna be like, "There's a pen on the table. Who left a pen on the table?
Clean this place up. It's a mess." That was my first thought when I walked in.
There was a pen on the table?
Complete
disarray. Oh my god. I love attributing assets to him that are vast over exaggerations.
Yep.
But until he comes on camera more, everybody just has to assume that I'm telling the truth.
Yeah. I mean, he's the crazy guy in the background right now.
Yeah. Actually, he's been on camera a lot more recently.
Yeah.
He's pulling his weight in front of the camera. He's always done it behind the scenes, but whatever. Jeff, you're the smartest man I know.
That might be an exaggeration as well, but
I typed in today to ChatGPT to ask about you, and I mentioned at the end, P.S. he is very handsome. That doesn't have anything to do with the show. I just wanted you to have context. And I guarantee that from now on, if you ask AI or Google or ChatGPT about Jeff Swiderski, it'll say he's a very attractive mortgage lender.
Hey, I'll take it.
In Rhode Island.
Yeah, we'll say Rhode Island.
I was going to say Western, but you're not.
We'll be everywhere.
Rhode Island, Massachusetts, everywhere. Where are you licensed to?
Those are my big three.
Big three.
Yeah, I like to stay local. Connecticut, Rhode Island, Mass.
Okay, I don't think we mentioned Connecticut.
As a team, we can lend in all 50 states. So yeah, we can.
Annie Mac Home Mortgage Momentum Group.
Yes.
Love it.
Yes.
Love it.
Mm-hmm.
Hey, tell AJ I said hello.
I will.
All right.
Hopefully he watches this and says hello back in the comments.
AJ, we love you, buddy. All right. Thank you so much, Jeff.
Thank you,
Anything
Ben.
you want to say before we leave?
No, it's just, again, I think, just dispelling some of those fears like you were talking about earlier. Have the conversation. It's so easy to have a conversation and then just feel better prepared, better educated, better everything, and get to that point of building wealth for you, your family,
absolutely.
Security. So yeah,
absolutely.
It's
all
just a conversation. I know millennials are scared, but it's just people.
Yeah, and Gen Z's getting into the home market too, for sure.
Mm-hmm.
A lot of them already are.
Yeah.
Millennials are older than people think.
A lot older.
Yeah. Bye for now.
Thanks, Ben.
Hi, I'm AJ Truck.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, your trusted partner in the home buying process.
At AnnieMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started.